I've seen a lot of homes sit on the market for months and months and months, and I've seen homes that are comparably priced sell in under a month, which
Hmm.
doesn't make any sense to me. Like I have an open house lined up for this weekend, a new subdivision. It's been on the market for 130 something days. There's nothing wrong with the house. I previewed it a couple of days ago. It's perfectly fine. She's a basic St. George house. It's reasonably priced, but for some reason it's been sitting for close to 6 months. And I see stuff on the MLS that's not unreasonably priced, but definitely not priced to sell that goes very fast.
What price point are you seeing most of the new construction coming in at?
It really depends because you have the less expensive subdivision from Salisbury Homes and people like that, and you have Cole West. Cole West is low sixes and up. And right now they're breaking ground on. Actually, I take that back. Lately, they've been going after the higher price points, so anywhere from mid sixes to a million plus. And right now they're breaking ground or already broke ground on the high end subdivision. And it's I think they start at mid sevens, something like that. But you also have, like I said, builders like Salisbury and a few other ones.
And
Mid,
Salisbury, Cold
yeah,
West.
um, mid threes.
Yeah.
Okay, because one of the resources we're going to talk about tonight is that new construction grant and where we're at with that. But I know we've got Craig with us tonight, and I want to go ahead and let him go ahead and get started because I know he's busy, and we're glad he's joined us. Last time we met, Craig, I mentioned this 2 weeks ago. Dale had explained a little bit about the Rocky Mountain Homes Fund, and I've
Yeah,
shared the website with all of our agents. Talk, explain what it is and how the process works because it is a really unique kind of product.
yeah, totally. So they're open to a wide variety of applicants, so that's important to note. They do prioritize if they're at a moment of limited funding, they do prioritize certain occupations like school teachers, police, fire, military, things of employment of that nature. But right now they are not. They do have some extra funds right now, so really any occupation can apply. Um, they a good applicant would be someone that they can have money in the bank. That's not a problem. That they have at a minimum they need to have a few $1,000s. So 10, maybe they could have qualified with a little bit less than that, 5 to 10,000. They'd have to probably have at least that. Credit's not too big of an issue as long as they have not been wild in their credit choices, such as I mean they've turned down applicants who make a lot of money but have had 6 digits worth of debt for car loans, like literally 100 plus thousand in car loans. They're not going to go with someone like that. They feel that that's people that are just that's not who they'll go after. But credit doesn't have to be perfect. They need to have just a few $1,000s. And then put them through the application process. They just go to rmhf.net, and there's a calculator on their website at rmhf.net that calculates what their monthly payment would be. So it's like a lease to own, rent to own situation, but but assuming that it was being run with someone who has a heart, because that's what this really is. Because um, the traditional lease to own, the monthly payments are going to be above market. Your final purchase price is going to be above market. I mean, it's really the landlord taking advantage of the tenant as much as possible. This is the opposite of that. This is where the landlord is benevolent as much as possible. And so the monthly payment is generally about 2% lower than what you will find on the normal market. And with every monthly payment, a portion of that goes toward an eventual reduction of the purchase price. And so the home fund, so the process being the applicant applies, if they get approved, they are given a certain budget. So let's say they're given a budget of $500,000 or $450,000. They then go around and tour around with our company, our agents, and and then they they choose a property that they like. At that point, it comes back. I get notified, and then I do a thorough market analysis because the home fund doesn't do any appraisals. So I do a thorough market analysis, make sure they're not overpaying. The home fund is, they'll do thorough due diligence, make sure the property's in good condition. The home fund is very particular about the age of roof, HVAC, furnace AC, that kind of stuff. They don't want to buy properties that have aging appliances, aging roofs. And then also the HOA, we make sure the HOA's health is good, that the HOA actually allows investors, even though they're not per state definition an investor, they're considered an owner occupant, but some HOAs don't follow state, like they just don't understand state law. And an RMHF, they don't want to get into a legal battle with an HOA. So they will only buy in HOAs that are openly friendly to investors. So RMHF will buy the property, and then the participant moves in, their monthly payments are below market, of which a portion of that goes toward an eventual reduction of purchase price. There's a 3-year blackout window where they cannot buy. After that 3 years, the Rocky Mountain Homes Fund is open to selling the home to the participant. If the home is appreciated during that 3 years, which is possible, the home fund will give 50% of the appreciation back to the participant toward their down payment, along with a portion of each monthly payment that has been reducing the purchase price. So there's this equity that is there that 3 years later, the participant can buy the home. The participant does not have to buy in 3 years. They can buy 5 years to 8 years. A handful of years later is fine as well. Some participants choose not to buy and they move out. And even in those circumstances, there are moments where the home fund will actually cut them a check for some of the equity that's been created. It's sort of on a case-by-case basis. I know our RMHF has a formula for when that happens, but there have been moments where the participants moved out, and not only did they enjoy below market monthly payments while they were in the home, they also got a check on the way out of the home, even though they didn't buy it. It's really unusual. It's amazing. The home fund operates on very thin margins, and so as a brokerage, we actually are crediting back a huge portion of the commission. There's not much money. It's more of a give back to the world, cast your bread upon the waters, and a moment where karma. We rely on karma to bless us in other ways by bringing people to the home fund. There is a little bit of money. So if, like, for instance, if any of you refer someone into the home fund, you can just let me know so that if they get approved, I can make sure you're the one that's working with them to go around in the home search. There's some money that I pay per showing. So if they see a handful of homes, there's a certain money that we'll send you. And there's potentially also a little bit of money if the referral comes from one of us. There's a little bit of money that the home fund can share with us as well, like a $250 thank you, something like that. So if it comes from one of you and it goes into the pipeline, then let us know so I can make sure that the home fund will give you some of that money as well as a thank you. Now, eventually, they may, again, this person may choose to buy at some point. They might buy from the home fund, but sometimes they just don't and they move out. And so if it's someone that that you got into the home fund, you can still maintain a relationship with them, because who knows if, a few years down the road, maybe they have a different idea and they don't buy that home, and you can help represent them buying some other home besides that one. But that's sort of it in a nutshell. And they've got success stories on their website. And they've helped, they generally help about 24 families a year is sort of the pace that they're currently on. I think that's about how many they helped last year. They project this year as well. And it's throughout the state. So it's anywhere in the state of Utah. If you know someone that they will qualify for that. We are the exclusive broker. They don't work with anybody else. They've had many brokers reach out to them saying, hey, we want to represent you. And recently there was a pretty aggressive agent that called and was trying to get into that relationship. And the home fund loves us so much. Rocky Mountain Homes Fund, they will not entertain any other agent coming in and representing. So it's exclusive to our brokerage. We're the only ones. Like, if someone wants it, they've got to go through us to get it, which is pretty cool. So we've developed a really good relationship with them. We've been very obviously benevolent back to them with the commission that we credit to them to help them run their business. But I feel like it's one of those altruistic causes that blesses us in other ways. So anyway, that's it in a nutshell.
So
And
Can I
we
ask
have,
a quick
sorry,
question?
we have put a number of people into homes through that fund here in southern Utah.
Yeah, Dale's
so
helped on a number down there. Yeah, Jeff,
uh,
what you had a question, Jeff?
yeah, Jeff, go ahead.
So I heard that, and it sounds really good. It's a great program, but did I hear that we don't get a commission if we're helping them get into a house?
There's more of a payment per showing arrangement
Okay.
that happens. So so generally it's about $75 for door number one and $25 for any door thereafter in that same trip. So if you show 3 homes, there'd be like $150 as a thank you. And then also if you were to sometimes you have to drive further, like if you had to go up to Cedar City or something like that, there would be some obviously extra payment for that. But if you were to be the one that refers the person in, there would be another $250 as a thank you
Okay.
from the homes fund. Then if you're working with them and they go off and see a handful of homes over a period of days, I mean, there's a few $100s potentially that comes in.
Okay.
And
Thanks for clarifying that.
yep. And Craig, so that everybody understands, the structure of this is a modified rent or lease to own for the buyer.
So the fund is buying the house and
The
then
fund
leasing it
buys the
back to
house
back to the client.
and rents it to the client on a contract. And one of
Yeah.
the terms of the contract is at the end of 3 years, if they qualify now to buy the house themselves, then they go through the process of buying it from the fund.
It's a 3-year lease option from the fund.
Yeah, and there's a 3-year window in which the fund won't let you buy it, but after that 3 years, you've got like several years that you could buy it.
Right.
And like I say, the home will likely appreciate during that time. The fund recognizes that they give 50% of the fund, they give 50% of the appreciation back to the buyer or
Gotcha.
to the participant. The home fund actually does not make any money on this because any so the money actually goes back to the various investors that are putting money into the fund. Right now, it's Zions Bank, America First Credit Union, IHC. Those are some of the big donors to this. They donate at a very low interest rate that enables the home fund to go buy homes at low interest rates, put a participant in the program with a low monthly payment. So the home fund, they are getting a tiny amount of basically a property management fee because they manage the property. So that's actually how they make their money, and then off of the commissions that I credit back to them. I mean, that's really how they're making their money. And then the home fund, each participant has a little bit of fees at closing. That the home fund it goes to help with some of their administrative stuff, but that's basically how it works.
So a buyer looking into this needs to know there's not a down payment at that time, but
Right.
but they're going to need to plan toward that in the end.
Well, the down payment though will be the equity that's the equity increase, or because they've been making monthly payments.
Yep.
Those monthly payments will help develop equity.
The down payment's deferred to like it's like an option fee at the 3 years essentially.
Yeah, so instead of them having to try to save up like 20,000 for a down payment, they've got a portion of the equity at the end of the 3 years that they're awarded, plus a portion of their monthly payment is credited toward it. So
They're
you're not
like
trying to pay
banking
rent
this money
and
for 3
save
years.
for.
Yeah. So they're like
sort of
banking it for 3 years and then they can use it towards the purchase at that point.
Yeah. So if someone can qualify today for purchasing a home, I would just, go have them buy a home. They wouldn't necessarily need the home fund. If things are out of reach, they're like, man, this person can't qualify because they just don't make enough money. That's the person that really that you should send over to the home fund, because it's someone you wouldn't be able to represent anyway. With a traditional purchase, they don't have enough money. They should look at the home fund to see if that lower monthly payment would be enough for them to be able to get in the door somewhere and start
Are
developing.
they taking lower credit too? Like lower credit?
The credit does not need to be perfect. I mean, they need to. Yeah, credit doesn't need to be perfect. They don't have a hard minimum credit score that a participant has to qualify for.
But this also puts them in a position to help build that credit over the 3-year period.
Right. My sister-in-law is trying to buy a house, and this might be perfect for them because they don't make a lot of money. He works for the hospital. Their credit's kind of not perfect.
Send them in, and then if they get approved, just let us know, and then we can cycle them back your direction. Or where do they live?
Kanab.
Oh, okay. And
Yeah,
so
we're down
yeah,
here.
you could service them down there. That's not a problem. And we could work that out. And sometimes if it's a further drive, again, we can work out some additional
Oh,
money.
actually, Greg, if you recall, we had the closing in Canab. It was a FISBO for
Oh, that's
somebody.
right.
Yeah.
It's like
That's right. There was
2 hours
that
away
one in
from here.
Kanab that we
Yeah.
did.
We
That's
had one in
right.
Moab, didn't we?
Not in Moab, not
Not
yet.
Moab. Okay.
No.
A lot of
Yeah.
ab places here, Darren.
I like Kanab. That's a fun little town down there.
Little town. Yeah, my
Yeah.
brother-in-law is from there. So they went back out there and living at his mom's house, but she wants to sell it, so they kind of want to see if they could just buy it from her. But they can't qualify for a loan. So
Uh,
this might be a perfect thing for
just
them. I don't know.
just one more thing about that. I have a little infographic that kind of sort of explains this process. So I'm happy to email it to
Yeah, that
Please.
would be great.
once you have some sort of a visual idea of how this works.
That'd be
Absolutely.
helpful.
Yeah, and if nothing else, have them apply just to see if they qualify.
Right. Yeah.
It's like working with any other buyer that we want to make sure, are you pre-qualified? Well, let's get you pre-qualified with this program.
Is it a
I
soft pull when they pull credit or anything like that?
Um, I don't even know if they pull credit. Well, let's see. Yeah, I don't even know if they pull credit. I'm not exactly sure because they're not loan officers. They're not underwriters.
Yeah.
I'm not exactly sure how they do that, but anyway, I would recommend people just apply. I'll tell you, I put my daughter in the program. She just got into a home in Eagle Mountain. So I mean, just shows you how I believe in it. So she's in. She's she got into a nice home that would be probably 500 is in the 500,000 range, and their monthly payments like 2,600, something like that. Which is, and they
Okay.
didn't put any money down, like maybe $1,000 or something. Like it's
No,
it's
that'd
really
be.
really reasonable.
Is there
And
an
she
age limit on applicants? Do you
nope,
know?
no age limit. Um, yeah, and like for her situation, she could not approve for a normal loan because she's self-employed and she doesn't have enough history on the self-employment. Now she had enough money in the bank where the home fund's like, okay, we're okay. You've only been self-employed for a year, or maybe she was 2 years in, but just she wouldn't have been able to buy in Eagle Mountain in that specific neighborhood with her current structure. The payment would be just way too high for them. And so this ended up being a good job, a good opportunity for them. And they're really loving it. And the risk is really low because there's no obligation for them to purchase. They just have the option to, not the requirement to. So if for some reason their life circumstances change and 2 or 3 years from now they decide to move somewhere else, they can do that. It's not a problem.
I know we sent this information to Caitlin, and she's got one in Cedar City that she's provided a buyer she shared it with. And I asked her how it's going. She said, "Well, I need to get them to fill out the application." Kind of
Yeah.
like the usual frustration with pre-qualification. Just you'll spend 10 minutes doom scrolling Facebook and filling out a survey on what kind of loaf of bread am I, but
Yeah.
you won't spend 10 minutes filling out
Mm.
an application that could get you into a house.
So true. Anyway,
Yeah.
I have a couple clients in mind that I might be able to help with this program. So I look forward to seeing the application and thanks for sharing this.
That so the email I sent out, the website's on that one. It's rmhf.net.
Right.
I found out the hard way because I just typed in rmhf.com. Not the same thing.
Okay.
So, but yeah, it's a tool we can use. And Craig has mentioned up here a couple times. We've explained it to the agents up here. It doesn't get used enough. There are people in careers that when I started, my first career was teaching. My first year teaching 33 years ago, my starting salary was $23,000 a year.
Mm.
If I'd had a program like this, it would have been a lot easier to get into a home.
Yeah. That's
And
true.
and there are careers that some people go into, like firefighters and medical, where it takes them a long time to get to where they're making enough to feel like they can qualify. Well, they shouldn't feel like they've been left out because they chose to be a public servant, um, and public servants can only get paid as much as the tax base can support. so they feel like they can get into something and get started. And like Craig said, if after two or even after if their life situation changes and they're not going to be able to buy it, at least they had a nice house for less than they'd have been paying on the market, and
Mhm.
they've got a better sense of what it takes to buy a house because they've been through the process.
Right. How do we, as agents, find the houses? Like if we go through the application and they qualify for X amount, is it up to us as the agents to find a house in that price range, or does RMHF come up with
You
a list of houses that we show them?
you
That's
treat it
great.
like a regular listing. In fact, on their website, on their budget calculator, it says, "I found a homes I love. What would my payment be?" And it even shows them how to go to utahrealestate.com and look for it and look on
So the
theirs.
yeah, the participant. So we just set up a listing alert, and the participant generally will go. The home fund lets the participant go off and just search wherever. They prefer that they use Flex MLS or UtahRealEstate.com, somewhere that's got more accurate data. But yeah, as so let's say you refer someone in, they get approved, and then you're the one that's asked to help go find them homes. The participant will be searching online. You can also search online and suggest some homes that meet their parameters. You can set up an alert to be notified when homes meet their parameters. So either way, but yeah, the home fund does not go out and search for the homes for them at all. It's usually
Okay.
the participant that's sort of driving that, saying, "Hey, I'd like to see this, this, or this." Sometimes we'll suggest, "Well, what about this or this?" Um, Something like that.
And
I can feel that one because I've shown
yeah,
probably 50, 60 houses for this program. Typically, they get a pre-approval amount, and it's a pretty hard cap, so you know what you're working with. Let's say it's 400K. The buyers are usually pretty proactive about finding what they like, and they'll send you listings that they would like to see, and you also can show them what you have on your end through the Flex or whatever sources you may have. But usually it's not hard for them to find stuff that they like, and they'll send it to you. I mean, I was pretty busy showing people the stuff that they sent and told me they wanted to see.
Okay.
and
So
it also help them
RMFH
start to
then, go ahead.
yeah, as I said, it also will help them start to see um, using this budget calculator they've got, how much can I afford to pay for rent, or am I paying now, and can I afford this? Because like all of our buyers, like Dale said, they've got a hard cap of 400, and they start realizing 400's a little more than they think they can pay. Then they can start working backward and saying, okay, well, if 400's a little more than I can pay, what if we did, the same as any buyer, walk it back a little bit and see what we can get. Now,
Perfect.
Dale, you mentioned they bought one that was a for sale by owner in Kanab,
Yeah,
so
this
they
is
will work
something
with
that they
FSBO.
found. Um, as I remember, I'm trying to think. They looked at a bunch of houses here in St. George. The guy worked for the Forestry Service, so they
Yeah.
lived out in the sticks somewhere here. I forget where they lived. So they looked this way in St. George, and they looked in Kanab, and the one they found, there's not a lot of homes for sale in Kanab. The one they found was a FSBO.
Yeah.
Yeah, there's not a lot of turnover in Kanab. It's the same 10 families have lived there for
They do that
120
on
years.
purpose too. Like they do not want growth. They just barely got a Maverick like 2, 3 months ago.
But there are areas down there that, yeah, and you guys know the market down there, and what areas that you can start saying, hey, if this is the price range you're looking at, this is probably where you're going to end up. So let's look in those areas. Let's be reasonable. Well,
Okay. Well,
Craig,
I've
I
got
know
to.
you're busy.
Yeah,
Thanks for
I got to hop.
joining us.
Yeah, I got to hop out to the next thing. But yeah,
Yep.
thanks for letting me come in here and yeah, be part of it.
Good seeing
Okay.
you, Greg.
Good to see you,
Yeah.
Craig.
Likewise. Take care, everybody.
All right.
Well, before as we got started, I was talking about new construction, and I know you're familiar with hold on. Utah Housing is where the if you've got buyers looking at using that um, SB 240, this is where they're going to go to get the information about that. So home buyers, um, okay. Oh, I had that bookmarked before and then I lost it. Okay, hold on a second. How many of you have any of you actually used that SB 240 grant? The $20,000? Okay.
No,
Um,
we dealt with a client that had one of these Utah Housing Corp loans to try to sell the thing, and it was atrocious. They're horrible.
that already had an SB 240 on it or
It
Utah
was a
or
short sale, and they like did it 2 or 3 years ago, and so we had to talk to them, and they were just hard to get a hold of.
okay. Yeah, getting through. Oh, here we go. All right. So it is administered through Utah Housing. The difference between one of the obvious difference between this and the typical Utah Housing FHA, where somebody's borrowing the money for the 3.5% FHA down payment plus closing costs, this can be used with any type of lending, conventional FHA or VA. It's a silent second mortgage. So whatever amount they use, up to $20,000, is recorded as a second lien, but the longer they stay in the home, the state amortizes it, and the longer they're in the home, the lower the payoff amount they have to pay at whatever time they vacate the home, whatever time they sell it. So unlike the traditional Utah Housing where you've got your FHA loan, primary mortgage, and then your Utah Housing second mortgage on top of it at a higher interest rate, this just sits there silently for that time period.
Does it trigger mortgage insurance premium requirements?
They're going to have to work with their lender about what that's going to do for mortgage insurance amount or their PMI. And honestly, you want to make sure their lender understands how this works and will accept it. I have worked with a couple lenders who they looked at this and another one I'm going to show you in a second and said, "Oh, we don't want to deal with that, so we're not going to let them use it." I'm like, "Great, so they can't buy." The other thing is it is for new construction only. It doesn't matter if it's condo, townhome, or single family. It can be used for any type of new construction real estate. Funds are available until depleted. So the fiscal year in Utah, starts on July 1st. So the closer you get to that, the greater the chance of running out of money. I've been watching the state legislature. This started 3 years ago, and they are debating continuing funding for this. They just haven't decided what level. The state legislature itself is looking at shrinking the state budget by 3 to 5%. So everybody statewide has been told expect less. But this has been successful enough they don't want to cut it off. They just have to decide how much is going to go into it. And then it's, first come, first serve. If it runs out of money, it runs out of money for the year and you have to wait till the next fiscal year. And I was mentioning this with a group of at a Chamber of Commerce today. And I said, the question comes up of what is a first-time home buyer? They use the FHA guideline. If you have not owned a home in 7 years, you do qualify for this as a first-time home buyer. And this is for purchasing homes in Utah. So if you've got someone outside of Utah transferring here for work, have them apply for it and see what they qualify for. Now, there are going to be some qualification requirements for income and a couple other things, but at least have them qualify for it, see how much assistance they can get. Utah Housing also has another program that is specific to active duty military, which includes National Guard, and separated from the military as long as closing on the purchase occurs within 5 years of their separation date. It's $2,500. It is a grant. It does not have to be repaid, and it can be used toward loan closing costs. There is one national VA lender that I work with who told me they wouldn't Nope. So they wouldn't let them use it because they were afraid it would mess up their numbers in terms of their debt to income. I'm like, it's $2,500. All they're going to use it for is closing costs. This is another one that is, once it gets the funding every year, once the money's gone, it's gone. So far this year, they have not run out of money on this one. But there have been a couple, I mean, like 2019, 2020, when things were busy, I ended up with a couple of clients who applied for it and ended up on the wait list to see if somebody else dropped out first before they could get it. Particularly the closer you get to July when the fiscal year starts. And this does not have to be used on new construction. This can be used for built standing. And it does not have to be with a VA loan. If they are choosing to use a conventional loan, they're blowing an opportunity, but it can be used with a conventional or FHA. And these are administered through Utah Housing. Okay. The third one I wanted to share was Ultimate Home Lending that we partner with. I sent an email to Josh McGreevy and said, what have you got? And this is the one that he sent to us, that they have some programs specific to Washington County for down payment assistance. If they're using UHL for their lending. They also have a 3% down payment, 3% grant program. And then they've got a Borrow Smart grant of up to $2,500. So he sent me this one. They've actually got quite a few to work with.
Can you email that to me, Darren?
Yeah, the email I sent out earlier today.
It's in the email.
It's in the email.
Yeah.
It's the one that says UHL. This one I've heard about for a number of years. I haven't had anybody ever use it yet. How many are familiar with the Chenoa Fund? This is kind of interesting. A couple of Native American tribes made so much money on their They made so much money with their casinos, they had to do something with it. So they started a fund to provide down payment assistance for home buying. And so it's actually administered through a couple of Native American tribes. But he put a whole bunch on here. And then, of course, you're familiar with, have any of you ever used a USDA loan before?
No.
I've had one client do it, and where they bought it no longer qualifies. Eligibility in Utah is tough right now because it's being USDA is through the Department of Agriculture, and it's for rural housing. So it's dependent on the population. We can't use it in Salt Lake. Salt Lake doesn't qualify. Salt Lake County, Utah, most of Utah County, Davis County, most of Weber County don't qualify. And parts of Tooele County no longer qualify because it's too much population. But this is a zero down payment program for home buyers as well. My experience with it, the one downside is it has to go through USDA review, and it's a government review. It took 6 weeks to get the final loan process completed. So we had to keep putting off settlement a week at a time until the USDA reviewer got done with it. But this they would apply with their lender. So it's like an FHA or VA loan. If the lender offers it, they can look at it, but the loan officer is going to have to go in and see if the home qualifies based on population. And I know St. George is growing so fast. Depending on what the population numbers were last time, there may be parts that don't qualify anymore. My buyer bought in Saratoga Springs, and 2 years later, her house would not have qualified. But it's a zero down opportunity. Um,
into it.
I've got to take step out for just a second. If you guys want to share with each other some things that you know about, I've got to step out for just a second. Um, so I will be right back. But share with each other things you know about Southern Utah.
All right.
What do we know?
Dale, what's new and exciting in your world? You ready for the parade of homes?
I haven't gone in a bunch of years. I think they get worse every year.
It's the same houses every year. Like last
Hmm.
year, every house looked the exact same.
Yeah, I think they're
Think
getting
so?
smaller and uglier.
There was one house last year that was like 24,000 something square feet. Um, that was too much house, but that was the only cool one, really. Everything else was kind
Yeah.
of
There were
mediocre.
some, yeah, last year I saw a couple. I like going personally, but I saw a couple that had like their own entertainment in the backyard, right? Their own resort. Those were pretty cool, like the floating rivers and swimming pools and stuff like that. Something that's way, way out of my budget, but they're nice.
I saw one in the fields about 3, 4 years ago. It had a indoor basketball court and a courtyard with its own pool, like inside the house.
Mm-hmm.
And that house was probably half a block wide, as a lot of homes in the fields are. But aside from that, yeah, like you said, they're all pretty much look the same.
Yeah, it amazes me how some of them build these huge homes on postage stamp size lots,
Right.
right? They just go property line to property line and it's all home. But I don't know. I'm excited to see Strata homes this year. Last year they had a home that was between two parade homes and it wasn't part of the parade, but I saw it and I thought I went into it and it's probably our favorite house. My wife and I really liked
They do
it.
some
So,
crazy stuff over there at Strata Homes.
yeah. So, do you guys have any what's your feeling on the market right now? Do you have any listings? What's going on your guys' end?
It's been pretty dead for me. Um, a lot of people talking a lot of smack, but nobody wants to make any moves, is what I'm getting.
Yeah. I focus with investors, so I'm not really
Mhm.
looking for listings. They come up every now and then, like opportunities do.
Price is
But
definitely an issue.
I think maybe this is just me, but I think St. George will be like Park City in the next 10 years.
How so?
Price point, exclusivity, tourism base, just a few different things. Just from what I'm seeing with investors coming in, I
Mhm.
think we'll be like Park City, or Palm Springs even in the next like 10 years, honestly. But
Interesting perspective. So, what do you do with, you say you just work with investors, Keaton? How,
yeah,
so
that's
you
mostly my
help them
clientele.
sell houses or help them buy houses or property?
Um, I'm normally the one sourcing the deals. So I'm finding flips, rentals, seller finance transactions, um, some Airbnbs, but not really. And then my company that I own, we're doing flips and things,
Hmm.
also. So that's kind of where my clientele is.
He's the guy that gets to play by all those new cash purchase and non-finance purchase rules starting March
Yeah, I
1st.
saw those and I was like, oh, geez, okay. But
Get ready to
Yeah,
pay
it is
another
what it
that
is.
120
one's
bucks a
scared
closing.
too.
Yeah, it
What's
is what it
that?
is at this point. But um, yeah, I mean that's my space. Single family flips, rentals, seller financing is kind of that's what I'm known for in the community. Um, just finding those things. So
I did a lot of that up in Washington State, almost exactly what you're doing, except I didn't really do any wholesaling. I didn't try to find properties for sale by owners and then assign it to someone else. Do you do that down here?
I do. I started doing. It's actually kind of cool. It's legal apparently. I found out, but I'm when I find a deal on market, I'll take the buyer's agent commission and the wholesale fee on the same deal. But I do wholesale sometimes. Some investors don't want to work with a realtor for some whatever reason. Um, a lot of realtors are stupid. I mean, not us, right? But a lot of realtors are stupid.
Oh, as an
Um,
investor, I can
mhm.
testify that that is a
So,
true
and
statement. Yeah,
right, and like investors think about things in a different way than most realtors are taught to think about a
you're
house.
right.
And so, a
100%.
lot of them don't want to work with realtors because, we're like car salesmen. So, um, I just will wholesale a deal or something at that point.
Hmm.
But yeah, just kind of depends on the deal, right? Like if the seller wants to list the house, I will list the house. If the seller wants to, take a cash offer, sometimes I will offer to buy it. And then I'll bring in a partner and close, or we'll just wholesale the deal out. Um, and then seller financing, right? Like if a seller's like going to foreclosure or or they're pre-foreclosure or it's an inherited home, like they got it from their grandma that they're like, I don't know what to do.
They
Uh,
just want to get rid of it. Give me
yeah,
some
or
quick
like
cash. Yeah.
tax delinquents or they want to defer their taxes and not do a 1031 necessarily. We can do the seller financing because with seller financing, you're only paying taxes on the money that's exchanged at closing,
Yeah.
and then
Sell
you're
over
paying your
time.
taxes deferred over to every payment.
I have a
They
few of
actually
those. Yeah.
mitigate a lot of their tax bill doing that. So, um, yeah, so that's what I do most of the time. I'm not working with regular buyers and sellers usually.
Keaton, on the seller finance deal, if I bring a buyer and I take the buyer agent commission, is there still meat on the bone in that deal for you?
Yeah. If you bring a deal and we can make it work to where the numbers match, right? Like, um, a lot of my investors wanted, let's say they want to be at like 12% down all in, right? So that there's 6% if it's an on market or 3% if it's off market. And then I just charge my fee on top. Usually I make like 10 grand on those. It's not super lucrative as far as that goes. I make more on cash deals. But yes, there is ways that we can work together if you find a deal,
Are
or you
those
bring a buyer
are
to
those
me.
fairly common here in Washington County, or is that like
Not as common as Salt Lake, but it is still a thing, right? Um, I've found probably three in the last 12 months down here. Most of my buyers are buying in Salt Lake. Um, so I'll do deals without even walking the home. But I've been focusing more down here, because I'm not finding a whole lot of things. And so it's like, okay, maybe I should just start looking because there's three of us down here that do the seller finance things that I know of, me and two buddies of mine. But they're doing deals in Texas and Oklahoma and like other things also, and I'm more just here. So there should be um, more opportunities coming because I'm going to be looking for them. But the other issue is that realtors will list the home as seller finance and then they offer stupid terms. Like they want 50% down, 3-year balloon with like 12% interest. And you're like, what?
Yeah. Let's make it worse than going to the bank instead of better and see how that works for you.
But
Right?
my seller's taking all the risk, Jeff.
Oh,
They,
yeah, of
they need
course.
they need to be protected because they're taking all you never went to a class on seller finance. I can tell that right now. Most realtors, all they want to know is how they get paid on seller finance deals. That's why
Yeah.
they don't do them because they're like, well, how do I get paid if it's not a real sale?
Yeah.
I
Well,
will
I've done
give
a lot
you
of those deals
cash.
well before I ever became a real estate agent, that's for sure. So I know exactly what you're talking about and what they're saying. So,
Yeah. So it's it's fun. I like it. I like it a lot better than working with regular people. I don't like being people's therapist, but
yeah. What I've been doing is I buy homes and I held them for a while and then I'll do a lease option on it. And then if they decide they want to buy the house, if I still think it's a good deal, I'll convert it to seller financing. And I've got a couple of those up in Washington, one in Oregon, and they're my easiest hands-off investment that has a consistent return than
Well, the
anything
seller
else.
feels like they have ownership at that point,
Oh, they do.
right?
Yeah, yeah.
They feel like they have like a rental, they're just renting it. But if you do like a
Mhm.
lease option or a seller finance where there's a goal of I'm going to own this house or I own a little bit of this house already, now they're taking ownership and pride in that because yeah, I don't know if I'll ever do rentals. I'll probably end up doing like if I buy a house to rent it out, I'm just going to seller finance it off because it
Yeah.
keeps the
So
investment better. It makes me way more money and less headache. So,
yeah, I ride the appreciation wave. Like when I buy a house, I will hold it a couple years, which means I'll probably fix it up and rent it out to a good tenant. And then once it appreciates, 20% or so, that's a good sweet spot for me to convert it to seller financing. And
mhm.
you just have all that phantom money that's all of a sudden a promissory note and works good on the payment and income side.
Yeah. We've
So,
also done wraps, like a wrap,
mhm. Oh yeah.
which is there's an existing mortgage and then there's another note around it that is so the mortgage gets paid and then you get cash flow also.
Yeah.
But that's more
I
for the primary resident that's going wants to buy it, like the Rocky Mountain Home Fund, that kind of a thing. But we're actually making money on the deal, not.
Yeah, so I have two wraps myself, but I don't ever assign my mortgage to them. If
Mhm.
I'm paying 3%, that's mine. I still charge them 7, 8, 9% on
Yes.
the entire purchase
Mhm.
price, and
Yeah.
I have to do my own escrow with it. I haven't found a good escrow company to take care of
Have you
stuff.
looked at West Star? They're a
I,
nationwide
I
escrow
haven't.
escrow company
Hmm.
that Pace Morby. I don't know if you've heard his name before. He uses them for all of his. He owns
West
like six
Star
hundred million
Escrow.
dollars in assets and uses them for all of his escrow servicing. West Star. Utah has one called Escrow Specialists. They're a little bit expensive, but it's because they're the only one in town. So, Title can also service those, but I would use GT Title for that if you're going to do that, the title. But
Which company?
uh, huh?
GT Grant
Which
Trailer.
title company?
GT Title. Christina Moser is the one up in Salt Lake. Julia Bennett lives down here. Um, they are by far the best seller finance title experts I've ever encountered. Real Advantage they can do that, but I use them for traditional and cash, and then GT Title for seller financing. They've
Okay.
just got the system down for that. But uh, yeah. Anyways,
When I've worked with Real Advantage, if it was even when I bought my mom's house on seller finance, their recommendation was they prefer that you go ahead and work through escrow specialists because
most
that's
will.
that's
Yeah.
all escrow specialist does.
Mhm.
So they've got a dedicated team where Real Advantage can do it and they'll do they'll do it as best they can, but they're focused primarily on the buy and sell recording side of it, the
Yeah.
title
Yeah.
insurance. So they don't want to.
Most title companies won't do the servicing. I would recommend using a third party anyways because that's all they do. And what they'll do is they'll take like so say I bought your house on seller finance, right? Like on a wrap, right? They'll take the money out of my bank and they'll pay the mortgage and then they'll pay the second note and they like do it themselves. So there's a receipt. The reason to use a third party servicer is if you've got a seller that needs to sell on seller finance and they want to go buy a new house, they do have to wait 12 months to get it off their debt to income, but the escrow specialist will show receipts that somebody else is paying that mortgage. So when they go to qualify for a new loan, even though the mortgage might have like 10 years or 15 years or whatever's left on it, it's not counted on their debt to income um,
Smart.
when they go to buy a new house. So,
Mhm.
And servicers like they'll also like escrow specialist and also provide all the tax documents at the end of the
Mhm.
year for the buyer and for the seller. So that, when it comes time to do their taxes at the end of the year, they've got everything they've got to report.
They'll issue the 1098s and the 1099s.
Mhm.
Yep.
Yep. Well,
Yeah, I use Northwest Escrow Services up in Washington, and I never been more displeased with the company than them, and it was a pain in the butt to unwind from them. So sounds like these are some good recommendations. I really appreciate it.
absolutely. Yeah, West Star, they manage, so Pace Morby, I don't know if you heard, he has like $600 million in assets nationwide. They handle all of his accounts. He's got like, what's he got? Over 2,000 doors,
Hmm.
and they do all of it. And he hasn't been at the bank in like 20 years because of seller financing. So he's a guy to learn from if you want to learn the seller finance stuff. But the right way. Because I know Jax Petty is like the title guy up in Ogden that
Hmm.
like teaches a CE course. He teaches it the wrong way. Don't even listen to what he's teaching you to do. He
Pace
teaches
Morgan, you
one, he
said?
teaches one way, and it's contract for deed, which doesn't benefit the buyer in any way. Like it's only protects the seller, which in a seller finance transaction, there should be a win-win, in my opinion.
Right, right.
Anyways,
Of course, yeah,
you do
every
want the seller to be protected, but there's no benefit to the buyer if they buy on a contract for deed. It's basically
you
like when you
said
buy a car, the title stays with the bank, and then once the car's paid off, then you get the title. That's what that is. And
yeah, you should get a note and a deed of trust
mhm.
for the lien on the house, but you should
Uh-huh.
have your name on it. You said Pace Morgan is the
More
guy.
Pace
B,
Morby.
Morby,
Okay.
pace, like as in pacing, um, or pace salsa, right? And then
So
Morby.
does he have training classes that he
Oh yeah,
offers?
oh yeah. He's got probably 10,000 YouTube videos that you can go watch.
Got it. Okay.
He's
Yeah,
got
I'll
a
start at number one. No,
he's
just
got a
kidding.
community that he, like a paid coaching program that you can
Hmm.
do if you want to do it. I have not signed up for it because I learned everything by doing it and on YouTube for free. Uh,
Right.
but yeah,
Yeah.
it's like
I
10
took a
grand to
lot of
join
those
that if you want to join
classes
that. But
in my younger days, decades ago. So yeah.
And I've taken Jack's Petty's class up here, and he does
It-
teach one way to do it,
it's
and he has his own
garbage.
contracts that he's written. He's an attorney and an escrow
Mhm.
officer, so he viewed it from that perspective. The one insight he did share in one of the classes I took is that for a long time, lenders weren't enforcing the due on sale clause
They
because
still don't.
he says they have seen now occasionally, but the lender still has to figure out what's going on.
Nine
And
times out of 10, you're not going to get it called.
yeah,
Like,
Yeah, it's actually higher than that. As long as the note's performing, the banks won't call you. If they're
right.
getting their money, they
yeah,
won't. They don't
There's
have a
no
company
reason to
that
call it
looks.
due. There's no reason to
Yeah,
call it due, right?
right.
The only thing is if like the seller calls the bank or if like the title insurance or the mortgage insurance is like wrong, then they'll
Mm,
call it. They'll like call and be like, "Hey, what's going on?" Right? But like that's why I use GT title for Utah because they know how to mitigate all of that.
mm, okay.
And the way they set up the trust deeds and things like that is way better than Jack's Petty. I know Christina Moser's not taking on a whole bunch of new clients right now because all of Pace Morby's like students. There's probably
Mm,
like 2,000 of them that all go to her. Uh, she's got like four or
wow.
five different assistants that help her with stuff. Um, so the one down here, her name is Julia Bennett. You'll meet her if you ever
She's
come to
with
the Real
Julie.
Estate Investor Association meetups. Um,
She's
she's
and
with
with
Julie's with
GT title.
yeah GT like
Hmm.
Porsche GT and then title. Yeah,
and
it's like Griffith and Turner or something is what the
yeah, it's Grant Turner, but yeah.
yeah
But
yeah.
GT is what they go by.
Hmm.
And you've got the state has the pre-approved seller finance form, but if an attorney or title company prepares the form as an addendum to the rep, so you can use that.
The seller finance addendum is cool. Like it does what you're supposed to.
Yeah.
Um, But if you're gonna do other things, I would talk to Christina and like see what she wants to do as far as recommendation for paperwork and things. But the state form works. I've used it on pretty much everything. I just
I
did one
haven't
in
used
Ogden.
yeah, I have forms that I've used in 3 different states. I haven't tried it in Utah yet.
Yeah,
But as a
Utah does
realtor,
have.
I've got to be really careful because I'm a realtor here now. And so I got more I's to dot, T's to cross, and
Yeah,
X's to
Yep.
watch. Yeah.
Just more disclosures is really all it is.
yeah, and
Um,
because it's built into the rep C that if it's marketed as a seller finance deal, then you have to have a seller finance addendum with the rep C.
mhm.
You can use the states or you can use someone else's. When we bought my mother's house where I'm at now, my brother is the executor for the state. He's an attorney and an accountant. He's like, I'll just fill that one out. I'm not writing a new one.
So it's good then. Good.
It had everything we needed. It was a pretty straightforward deal. We weren't doing anything too outrageous.
Okay.
Yeah.
Oh, you've got my appetite flowing to get into more properties. I've been kind of trying to wind them off, but I don't know. I'm just
My
passionate.
retirement plan is a boutique hotel.
There you
Oh,
go.
Well, we've been at it about an hour.
I
Thanks,
gotta get
Bex.
going anyways, so
Yep. This has been recorded, so I will post it on YouTube hopefully within the next 2 days, and we'll share the link with everybody because, like I said, a couple of folks weren't able to join us tonight. And then, what do you want to cover in 2 weeks?
Um,
From
how
my end,
familiar? Go
sorry,
ahead.
butt in. Any actionable advice on prospecting? That's what I'm always
Great,
looking.
great. We'll go over some prospecting ideas.
All right. If we could put Darren on somewhere on the agenda, maybe not next 2 weeks, but down the road, I would like to see how we're actually using our MLS and how we're using it to do CMAs
Yes.
because it's counterintuitive. I mean, I can do it quicker by looking on Zillow and throwing the information in a spreadsheet than I can our MLS down
I
here.
don't use the MLS to run comps. It's the MLS is too confusing. Like I use a different software that I have as an investor, but
Well, let's do this in 2 weeks. One way of prospecting is doing CMAs for people and doing drop buys. Let's talk about what your home is worth. But you got to know how to make it work. And Flex MLS is very different from the Wasatch Front MLS on how you do a CMA. Wasatch Front MLS is pretty quick and smooth, but you still have to make adjustments. But we're going to be limited to what shows up, that's been boarded in St. George on the Wasatch Front MLS. So we may not have all the same properties Flex MLS does.
you don't.
Plus, you've got to be on
Yeah.
Wasatch Front MLS to have access to it. Most of you are on Flex MLS. So what we'll do is we'll set it up so that we'll do the share screen where one of you can log in and share, and we'll walk through and we'll play with it because I'm not on the Flex MLS. I've used it. The brokerage has a subscription, and I've used it a couple times, and I felt like I was back when the very first time I had to take a class on how to use the very early search engines, and they were having to explain it to a bunch of 50-year-old teachers who had never touched a computer before, and they were lost.
That
And I'm
sums it
over
up
there,
pretty
the
good.
30-year-old snot-nosed kid going, do this, do this, do what the hell was that? Do this kind of thing.
Right. Hey,
Okay.
Dale, to your point, I get flyers all the time, and I think they're brilliant that other realtors are using to market with. And it asks the question a myriad different ways, but the premises is, what is your home worth? Are you thinking of selling?
Yeah, I've tried that. I spent about $1,000 on that. I got bupkis out of it.
Okay.
Okay.
When we were still on what was the name of that CRM we used before Follow Up Boss? On Boomtown.
Boomtown. Yeah.
Boomtown had a feature where you could pay for leads and actually was partnering up with one of my lender friends, and we were splitting that cost, and I was getting some leads on a regular basis, but that's been almost 3 years ago.
Has anybody tried homes.com? Darren, I think I mentioned that one to you a while back.
I haven't used it for a while. I know the brokerage, at one time as a brokerage, we were paying for um, realtor.com leads and Zillow,
Mm-hmm.
but they were Wasatch Front area, and we were dropping about 15K a month. And we had
Zillow is expensive.
Zillow was getting expensive, and they're now registered as a brokerage in the state of Utah. So we noticed the quality of leads
They're cherry picking, man.
went
They're
down the
cherry-
toilet.
I gotta
And,
jump, guys, but
yep. And we had one agent close one deal in an
Thanks,
all year
Keith.
on it. So we're like, you know what? We got better things we could spend 15 grand a month on as a brokerage.
Yeah.
But we can look at homes.com. We can look at, and if you follow up well with those leads, they work. But national average on like Zillow and Homes and Realtor,
Yeah, it's
they're
more
about
than
it.
2%.
Yeah, it's a really low rate. Zillow at their peak was telling us 6 to 8%. If you were hitting 10% close rate on Zillow, you were in their top 5% of agents.
Hmm.
But Zillow just has restructured how you pay for theirs, and now it's a pay on closing, and it's a percentage. And my understanding is, depending what market you're in, it's up to 40% referral fee.
Wow.
Yeah. So you're working your tail off for half the amount of money.
All
So
right.
yeah, we'll put that on the meeting for next time, guys.
All right.
Great. Dale,
Thank you.
good seeing you, Darren. Thanks for your time. We'll catch up with you guys.
All right.